Do you save, invest, speculate, or gamble? And what category would you put precious metals, gold and silver, into? Hey everyone, thanks for watching Yankee Stacking. I want to talk about 4 areas that you can put your hard-earned wealth into. The first is saving. Now, a lot of people don't even know how or why to save. I just saw a recent article saying that 63% of Americans are living paycheck to paycheck. Yeah, it's a very hard time, but one of the reasons why people struggle is because they haven't saved. The saving rate now is incredibly low. Saving is about preserving your wealth. It's about being prepared for what might come. And I predominantly save in 2 different areas. One with cash and the other with precious metals, this stuff right here. Both are highly liquid. Now, I don't put a lot in cash. I don't like to keep it in cash because, as we know, over time, your fiat currency loses its value. But it is important to have some cash on hand. So cash, precious metals, saving. The second area is investing. I love the quote by Ben Graham, the late father of value investing, where he says an investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Did you catch that? Not just making money, a satisfactory return, but safety of principal. That's the amount that you put into the investment. Yes, there are many ways to invest, many risk levels. Investments can focus more on growth or value or be a blend of those two. Capital gains or income can be the target. But preservation of principal is so important. This is about cautiously growing your wealth. The third area that you might put your hard-earned money is in speculating. This amounts to making educated decisions to greatly grow your wealth. This can and often does include leverage. The risks are higher here, guys. I do very little of this now, but when I do, it's still largely based upon real, tangible assets that have a track record going back a very long time. Unlike the next category, this is not some fly-by-night, get-rich-quick scheme that has no basis in proven reality. Okay, speculating for me is with commodity stocks right now or in gold and silver mining companies like the one I'll be highlighting in a minute. One more quote from Benjamin Graham that's very important. You must never delude yourself into thinking that you're investing when you're speculating. All right, so the fourth area that I want to touch on is gambling. This is all about the hot tips, momentum trading, completely ignoring history, price and earnings, common sense. This is about chasing what's hot, trying to strike it rich. If this is you, and that's what you're focused on, then my channel is probably not for you. Unless maybe you're interested in buying a Yankee coin. Just kidding. But that is the hottest thing right now, that category of cryptocurrencies. Bitcoin, Ethereum, XRP, stable coins too, like Tether. But I don't gamble my hard-earned money in the crypto casino. So I do videos on the first 3 classifications. I put my precious metals obviously in the saving category because it's more like insurance to me. I do private mortgage lending and I put that in the investment category. And I also buy commodity and mining stocks. Now, when I speculate a very small amount in mining companies, I'm looking to leverage my strongly held belief that silver and gold are going to go up, way up this decade. See, leverage is a way to make much more money if and when this happens. Let's talk to Alistair Still, the CEO of gold mining, and get more info on leveraging gold and silver in one's portfolio. Welcome back, Alistair. Great to see you again.
Very happy to be here. Thanks for having me here today.
In the intro, I talked about the nature of saving, investing, speculating, and gambling with one's hard-earned money. I would love it if you would take some time to explain how leverage actually works when you're speculating with mining stocks?
Right. So I think there's a couple of key things you've mentioned there we want to touch on first. Is first of all, we want to try and avoid the gambling part of things. There's always risk that we take in our investing, but we want to have confidence in what we're doing. And the reason I say that is because there's certain companies you want to watch for. You can do the basics. You want to look for a key and experienced management team. You want to look for quality of the resources and quality of the resource statements and the technical reports that go behind them. Those are the elements that the experts put together for you that take away the risk of gambling so that it's not a wild card shot in the dark. You want to have confidence in the team and the projects. And that's why I think a company such as Gold Mining Inc. is a great exposure to gold and precious metals because it has a great portfolio of projects, has a very experienced team, it's throughout the Americas in a great jurisdiction, and it's not single project risk. So you're not betting all your eggs or all your apples on one project. You want to have that diversity and you want to have exposure to different things in solid jurisdictions run by good management teams. That's what gives you good exposure to gold price. And that's exactly what Gold Mining Inc. gives you.
So since we last talked in June, gold broke through 800 and then pulled back again. It's like right at that psychological barrier of 1800. What might likely happen to gold mining if gold doubles in a few years?
Right. And this is a question I get asked a lot. It's, what do you believe the price of gold will be? Are we near all-time highs? And the first thing I always remind people is that even at today's prices, which is close to $1,800 per ounce, we're not near all-time highs. We're on a real-time basis, we are, but if we adjust that to an inflationary basis, the price of gold in the early 80s, if you inflation adjusted that to today, we'd be something like $3,000 per ounce. So we think we have a ways to go before we get anywhere near the high price of gold. That's the first thing. The second thing I want to emphasize on is having exposure and leverage to a rising gold price is exactly what Gold Mining Inc. gives you. So we've got some information we can provide and show you some charts that show exactly how we've performed in the past run-ups in the price of gold. I think this is a very indicative rationale to one that one might expect going forward should we see another price movement in the price of gold. So if we looked at the price of gold in December 2015 and when it rose to July 2016, we saw the price of gold go from a little over $1,000 an ounce to $1,380 per ounce. And one might say, hey, that's great. Gold went up 30%, 31%. That's great. But in the same time period, Gold Mining Inc., because of the leverage to the price of gold, it rose over 500%. That's a great return. You might think, well, yeah, everything went up in that time period too. And yes, a rising tide does lift all boats. But that's why we've also put on these charts a great reference point, which is the GDXJ, which is an index of junior mining funds, a basket to show how we've compared to sort of the average or a collection of funds. And that same time period, that fund only went up 160%. So not only did we crush the price of gold, we crushed the index as well, and it really rose because of that extreme leverage. The same thing happened again in a more recent run-up in 2019 until August 2020. That's when we saw the price of gold rise from $1,300 an ounce to over $2,000 an ounce. Gold went up 58%. The index went up like all funds would expect at that time. It was up just over 100%. But once again, GLDG, Gold Mining Inc., crushed them both, rose over 400% in the same time period. That exposure to the leverage price of gold, we think the gold price is going to go higher. Gold mining can really take off when it does.
Now, to be fair, Alistair, leverage works in both directions, right? I mean, we're looking at some incredible charts here, but you could probably show some charts where when gold goes down, your stock plummets, right? So that's what makes it a speculative play, right?
Yes, absolutely. The price of gold isn't always going to go up. Right. But what I would say is that our grounding point, our base level, constantly keeps rising because we're adding fundamental value to our projects at the same time. So it's not like an all or nothing. Like if you invested in a single mine, for example, it might do really well when the price of gold is high, but if the price of gold dropped, it might go out of business. It might go bankrupt. We don't have that kind of exposure here because we're diversified across a number of projects throughout the Americas that helps spread that risk and de-risk one's portfolio. So yes, it's not always going to go up, but we have protection on the downside by that diversification and the sheer size of the portfolio.
I want to talk about your valuation. It's pretty remarkable. So I think your market cap, and again, correct me if I'm wrong here, Alistair, but I think it's 210 million US, and that includes exposure to gold royalty, worth around 52 million. So if we take that out, we have a market cap of around 158 million US, right?
Yep.
And so your gold reserves, your resources from the 14 amazing projects that you have is roughly 32 million ounces equivalent, correct?
Correct.
So the price per ounce for your gold is around $5 an ounce. Am I doing the math right here?
You are doing the math right. And that's the fundamental value gap here. And that's why we've been stressing of unlocking value in our portfolio.
What's the industry average, though? So just from a comparison standpoint, is
Good
it $5
point.
an ounce?
It's certainly not. I think we're definitely at the low end of that range. And I would say a comparable basket of companies, similar stage projects would probably be $30 to $40 per ounce. So there's a fundamental gap there. And that's why I think really what we've been focusing on is unlocking value by heightening the value, heightening the awareness of projects that have previously been buried in a bigger portfolio without seeing activity, unlocking those and unbundling them, like the work to unpackage our Whistler project in Alaska as we get ready to launch that with a public IPO in the new year. This is how we unbundle that package to go from that re-rating from $5 an ounce up to $30, $40, $50 per ounce where our peers are trading at. My first part of my career, I was almost 25 years working for major operating companies and operating mines such as Newmont and Goldcorp, Placer Dome, Kinross, all companies I'd worked for. And when I had this opportunity presented to me to come work for Gold Mining Inc. with Amir Adnani and his circle of companies he's put together, I was incredibly excited. I looked at this portfolio. Much of it had been assembled but not advanced, and I looked at it like a blank canvas. So that the opportunity to move from that $5 per ounce current valuation up to even an average of what our peers are getting, to see a 5 to 10x potential re-rate, that got me very excited, got me very keen to come join this company and put my own money where my mouth is.
Now, I'm gonna pump the brakes just a bit, Alistair. You know what we're going through right now. The supply chain constraints we've had, the bottlenecks, growing recession concerns. How has that affected gold mining?
Well, specifically to Gold Mining Inc., I think we've been a little immune to it in many fronts because we're not as active as some of the major operating mines who have labor shortages, increased costs, or even major development projects. We're seeing development projects running hundreds of millions of dollars over budget. That's what's hurting some of the bigger companies. We don't have a lot of exposure to that because we're having much more manageable sized projects, exploration activity. We can put a lot of management effort and time to keeping to our budgets, so we have not as much risk to inflationary pressures. But one of the things that we're all exposed to these days is the constant barrage of news on interest rates and debt and inflation and recession. What does it all mean? But what we saw last week, which I think was a very telltale sign, is just the very notion that the central bank might be slowing its interest rate rises. Just that notion of it might slow a little bit caused almost a rapid rise in the price of gold in one day, some $40 in one day. Just that it might slow down a bit. So I think once we start seeing that really starting to happen, and it must happen in the new year, because only so much room the bank can rise rates because there's so much debt carried right now, we've got to be near that peak. And once it peaks and crests, I think gold could really be in for a violent rise.
All right, before I let you go, I do want to ask you one last question. What new catalysts might be coming to bring more value to shareholders? Like me.
Great question. We've got started on a number of initiatives this year and a couple of exciting ones early in the new year. We had a drill program this year we conducted at our La Mina project in Colombia. We made a new discovery there at La Garucha. We're currently in the process of putting a new mineral resource on that. We will be releasing that resource early in the new year. So we're excited about that new discovery. That's going to add ounces to our resource statement. So that's encouraging. But the big one that I'm particularly excited about, particularly since it's in the US, it's a really a stay at home and drive our own economy. We're taking our massive Whistler gold copper project, which is located in Alaska. We're putting that into a new vehicle called the US Gold Mining Inc. So we can focus on that project. We want to raise money on the public markets, take it public through an IPO, much like we created Value just a year and a half ago when we launched Gold Royalty Corporation. So stay tuned for the launch of US Gold Mining Inc. early in the new year.
Excellent. The ticker symbol for gold mining is GLDG on the New York Stock Exchange. By the way, New York Stock Exchange. This is not an over-the-counter stock, so you're probably going to be able to trade with it on whatever app you're using. By the way, don't just buy gold mining because Yankee is a shareholder. Please, you have to do your own due diligence. Check them out. Read up on them, and I think you'll be impressed. Anything else, Alistair, you want to say before we wrap it up?
No, I think it's been an exciting year. Certainly, a lot of people are, worried what's going to happen in the markets. We've seen a lot of pressure on cryptocurrencies. We're worried about inflation. We're worried about recession. So historically, gold and precious metals have been a good hedge against inflation. But I think it's also a significant opportunity for some significant rises in the price of gold. So not just to preserve your value, but to grow with it. And what better way to grow it than having significant leverage and exposure with a company such as Gold Mining Inc.
Thanks again for joining me, Alistair. Always a pleasure.
A pleasure to be here. Happy holidays to everyone.